BRICS Bank and the quest to reshape global finance. In the wake of the recent BRICS summit in South Africa, all eyes are on the new development bank, NDB. Established in 2014 by BRICS members, this young financial institution is gearing up to increase its lending to the global south. With a twist, much of it could be conducted in local currencies, a move that could challenge the dominance of the US dollar. While an immediate launch of a BRICS common currency might not be on the horizon, analysts suggest that the Shanghai-based NDB is poised to champion lending in local currencies. This shift comes as BRICS nations increasingly position themselves as a counterweight to the Western-led global financial order. Dilma Rousseff, current head of the NDB, states, "We expect to have lent between $8 billion and $10 billion this year. Our aim is to reach about 30% of everything we lend in local currencies." Already, the NDB has issued debt in South African rand to expand lending within the African nation. This move attracted 2.67 billion rand in bids, a significant indicator of interest. Additionally, the bank is actively working on plans for an Indian rupee bond in October. While the NDB's role in lending to countries has been somewhat limited thus far, the expansion of the BRICS bloc, with the inclusion of Saudi Arabia, UAE, Iran, Egypt, Ethiopia, and Argentina, is expected to propel this multilateral lender into a more prominent position. A report by the State Bank of India, SBI, highlights that the World Bank and International Monetary Fund, IMF, particularly the latter, often attach conditions to the funding they provide. The IMF, for instance, prescribes economic policies that borrowing countries must adhere to, rather than asking for collateral. While the BRICS Bank may not immediately displace the World Bank and IMF, its activities will be closely monitored. The question of whether the NDB will also seek to influence a country's policies in exchange for funding remains open and relevant, especially given that its clients will be primarily low-income nations with inherent risks of loan default, according to the SBI report. In summary, while the BRICS Bank may not dethrone the World Bank and IMF in the near future, it certainly has the potential to emerge as a significant player in the global financial arena. Owned by emerging market economies and not as susceptible to political pressures, it can provide loans in local currencies, offering an alternative to the status quo in global finance. Here are some key facts and figures about the World Bank, IMF, and the Global South. World Bank, a multilateral development bank, it provides loans to developing countries for projects like infrastructure, education, and health. It has a lending capital of approximately $200 billion. IMF, an international organization that provides loans to countries facing financial difficulties, it boasts a lending capital of roughly $476 billion. Global South, this term refers to developing countries in Africa, Asia, Latin America, and the Caribbean, representing approximately 85% of the world's population but contributing only around 20% to global GDP. Both the World Bank and IMF have faced criticisms for their lending practices, which some argue have exacerbated debt crises in developing nations. They have also been called out for their lack of transparency and accountability. In contrast, the BRICS Bank, though in its early stages, is seen as a potential alternative. It has the potential to offer more flexible and affordable financing options to developing countries, making it a promising contender in the realm of global finance.
Thanks for watching. God Kuber bless you with fame and wealth.